Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. July 29 Market Review. This video presents a direct informational narration of the source document. We're looking into the market overview of July 29th, a session that laid out some very specific dynamics across both the US and South Korean markets.
So, starting with the Federal Open Market Committee, they wrapped up with a 9-3 vote to maintain interest rates exactly where they are. Now, the source document details that the reason behind this hold is that inflation is remaining high, which is being driven by ongoing supply shocks in sectors like energy.
What exactly triggered the subsequent market drop? Well, the source outlines a micro-transmission theory here. Basically, a dovish signal actually sparked a spike in long-end Treasury yields. This sudden spike forced massive arbitrage funds directly into margin calls. Faced with these calls on their complex bond trades, they were pushed into a subsequent liquidation of cash treasuries. It's essentially a chain reaction where funds got caught off guard and had to frantically sell off assets.
Looking at the immediate market reactions, the Dow Jones experienced the absolute heaviest losses. Meanwhile, the anticipated rally for traditional consumer equities, that completely failed. The Nasdaq ended up falling for its 6th consecutive day, retreating all the way down to actually test its half-year line support. And to really put a metric on the market's anxiety, the VIX index broke right above the 20 level. Jumping over to Q4 and Q2 earnings, the figures from Microsoft and Meta are laid out clearly. Microsoft posted an exact $90 billion in revenue, up 18% year-over-year, with an EPS of $4.74. This was explicitly driven by a massive 43% revenue growth in its Azure division. Their free cash flow was $19.6 billion, representing a 23% drop. On the flip side, Meta saw a 28% jump in revenue to $60.8 billion and a profit of $15.85 billion. But get this, they experienced a staggering 55% surge in total costs, reaching $42 billion. That massive expense bill choked their free cash flow all the way down to just $784 million.
If you want to see where the data really points to pain, look at the Goldman Sachs High Beta Momentum basket. It's officially experiencing its worst performance in history, completely trailing the crashes we saw in 2000 and 2009. Basically, all the gains made since February have been wiped out, and the data attributes this directly to the unwinding of AI momentum.
Shifting focus to South Korea, SK Hynix actually posted an earnings beat, but the stock still dropped simply because it missed elevated market expectations. This was driven by an extreme pre-earnings put-call ratio that reached 1.7 times. Making matters worse, the Bank of Korea signaled future rate hikes. This came as a total surprise that flat-out contradicted their prior July 15th policy, which was originally implemented to limit leverage and quantitative shorting. To put the South Korean market plunge into historical context, the numbers are brutal. In a current 40-day period, the KOSPI experienced a 44% drawdown. That rapid drop wiped out $2 trillion in market value. We are directly comparing this to the massive 60% drop in 2000 and the devastating 76% collapse during the 1997 Asian financial crisis.
So, what is the current status? A recent JP Morgan report states that the retail deleveraging process in the South Korean market is approximately 90% complete. In direct response to this deleveraging, the source notes that the South Korean Ministry of Finance is actively planning market stabilization measures.
Away from equities, oil prices surged over 7%. This spike is directly linked to widening geopolitical risk premiums in the Middle East following an intercepted Iranian missile. That, combined with U.S. political statements regarding the control of the Strait of Hormuz, is keeping the pressure on the energy sector.
Looking at the specific figures provided for the broader tech sector, Qualcomm brought in $9.67 billion in revenue, which is a 4% year-over-year decline, and they missed expectations. Vertiv, however, saw revenue of $3.27 billion, up 24% year-over-year, with an EPS of 1.52. Lam Research posted $6.72 billion in revenue, marking a 15% quarter-over-quarter growth and an EPS of $1.82. AMD jumped 32% year-over-year to $1.3 billion with an EPS of 0.62. And it is also explicitly noted that despite recent pullbacks, ARM has retained 100% of its year-to-date gains.
Finally, looking at Micron Technology, the source states a literal price drop from $1,200 directly down to the 700s. What this data shows is that the semiconductor sector, and memory stocks in particular, track and move in tandem with South Korean market trends.